Global stock markets showed significant volatility today as technology shares surged, but concerns over inflation persisted among investors worldwide. The Nasdaq Composite reached a new all-time high, driven by strong quarterly earnings reports from major tech firms such as Apple and Microsoft. Despite the gains in technology sectors, some industrial and energy stocks experienced downward pressure due to rising commodity prices. Market analysts emphasize the delicate balance between growth optimism and inflation fears affecting investor sentiment globally. This complex dynamic continues to shape trading strategies on Wall Street and other leading exchanges. Gold futures experienced a remarkable surge following unexpected announcements of a 39% import tariff on 1 kilogram gold bars imposed by the United States government. This tariff has major implications for Swiss exporters, who play a critical role in refining and distributing gold internationally. Traders quickly reacted by shifting investments into precious metals, viewing them as safe haven assets amid growing trade tensions. Analysts predict that this development will influence global gold supply chains and pricing mechanisms in the upcoming months. The reaction across various commodity exchanges reflects heightened uncertainty and strategic repositioning. Switzerland's precious metals industry expressed deep concerns about the sudden tariffs, highlighting the potential disruption of long-established international trade routes and refining processes. Leading trade organizations, including the London Bullion Market Association, are actively engaging with policymakers to seek clarifications and potential exemptions. The industry underscores the importance of transparent and stable logistics frameworks for maintaining gold market liquidity and investor confidence. Financial observers are closely monitoring how these geopolitical decisions might alter gold market dynamics and investor behavior. This issue remains a critical point of discussion among global commodity stakeholders. The Bank of England took a cautious approach by lowering interest rates to 4%, marking the first cut in over 2 years, but faced divided opinions within its Monetary Policy Committee. Some members emphasized the persistent risks posed by inflationary pressures, urging restraint in loosening monetary policy. Others advocated for support to the economy, amid signs of slowing growth and weakening consumer spending. The vote split reflects ongoing uncertainty about the optimal policy path in a rapidly changing economic environment. This decision underscores the challenges faced by central banks balancing inflation control and growth stimulation.
Following the Bank of England's rate cut, the British pound weakened noticeably against the US dollar, prompting investors to reallocate assets towards safer currencies and commodities. Market participants expressed growing concerns about the sustainability of the UK's economic recovery amid global uncertainties and domestic policy shifts. The currency markets have become increasingly sensitive to changes in inflation expectations and central bank communications. Investors are closely watching upcoming economic data releases for signals on future policy moves. This environment fosters heightened volatility in forex trading across major currency pairs. In the United States, speculation about Federal Reserve appointments fueled optimism among investors, especially within the technology sector, leading to higher equity prices across multiple exchanges. The potential nomination of a more dovish policymaker raised expectations of prolonged accommodative monetary policy. Technology companies such as Nvidia and Tesla saw notable stock price increases in response to these developments. Market strategists highlighted the importance of leadership in shaping future economic stimulus and regulatory environments. This sentiment contributed to sustained momentum in equity markets today. The ongoing earnings season continued to deliver mixed but generally positive results, with several major corporations surpassing analyst forecasts and boosting investor confidence. Strong performances in software and cloud computing sectors offset weaker than expected earnings from certain industrial and retail companies. Short-term traders responded actively to earnings announcements, adjusting portfolios to capture emerging opportunities. This earnings-driven volatility has added complexity to market dynamics and trading strategies. Investors remain cautiously optimistic as companies prepare to release next-wave reports. New U.S. tariffs implemented recently have prompted multinational corporations to rethink their supply chains and production locations to mitigate increased costs. Automotive parts manufacturers and pharmaceutical companies are investing in expanding domestic manufacturing capabilities to avoid import duties. These strategic adjustments aim to reduce exposure to tariff-related expenses while maintaining market competitiveness. However, such restructuring efforts could slow global trade growth and increase production costs in the near term. Businesses are carefully evaluating these risks as they plan their operational futures.
Indian defense procurement plans from the United States have been temporarily halted in response to newly imposed American tariffs, raising concerns about bilateral trade relations. The suspension affects high-value artillery and aerospace contracts critical to India's military modernization programs. Both governments are reportedly engaging in dialogue to resolve trade tensions while maintaining strategic partnerships. The uncertainty around these deals has caused investors to reassess the potential economic impacts on regional defense markets. This development adds complexity to already tense geopolitical and economic relations in South Asia. Taiwan Semiconductor Manufacturing Company, TSMC, announced a 22.5% increase in monthly revenues to $10.8 billion, driven by robust demand for artificial intelligence chips globally. This growth reflects the increasing adoption of AI technologies across diverse industries, fueling semiconductor shortages worldwide. TSMC's financial results exceeded market expectations, boosting investor confidence in the technology manufacturing sector. The company's strategic investments in advanced chip production are positioning it as a key player in the evolving AI ecosystem. Market analysts are closely watching TSMC's future guidance for further indications of sector momentum. Wall Street indexes closed the week with solid gains, extending a positive trend fueled by optimism over corporate earnings and potential monetary easing by the Federal Reserve. The S&P 500 rose by 0.8%, the Dow Jones Industrial Average increased by 0.5%, and the Nasdaq Composite set a new record high. Technology stocks led the rally, supported by strong quarterly performances from key industry players. Investors interpreted these moves as signs of economic resilience despite ongoing inflation concerns. Market breadth suggested healthy participation across various sectors, reinforcing confidence in the recovery narrative. Artificial intelligence continues to revolutionize the financial sector by automating up to 75% of analytical tasks traditionally performed by human workers, enhancing efficiency and accuracy. Financial firms are deploying advanced language models like Claude and Gemini to streamline processes such as discounted cash flow analysis, customer relationship management integration, and transaction verification. This transformation has quadrupled the productivity of analytic teams while reducing operational risks. Companies including Microsoft have acknowledged that finance and business operations are especially susceptible to AI-driven automation. The ongoing digital shift is reshaping workforce requirements and skill sets industry-wide.
The integration of AI tools is also changing workforce composition within financial institutions, emphasizing emotional intelligence and communication skills alongside technical expertise. Firms like Goldman Sachs and S&P Global have incorporated AI applications to optimize investment strategies and decision-making processes. Traditional roles are evolving as automated systems take over routine analyses, requiring human analysts to focus on strategic insights and client engagement. This trend is accelerating workforce reskilling initiatives and reshaping career paths in finance. The industry's future competitiveness depends on effectively blending technology with human judgment. Global equity funds experienced net outflows for the second consecutive week, totaling approximately $7.8 billion amid ongoing trade disputes and economic growth concerns. Investors have increasingly redirected capital toward cash equivalents and fixed income securities to mitigate exposure to market volatility. Developed market equities have seen the largest withdrawals, reflecting cautious sentiment about global economic prospects. Fund managers are adjusting portfolios to balance risk and return under uncertain macroeconomic conditions. This trend highlights the fragile confidence prevailing in international investment landscapes. Bond markets attracted heightened investor interest as participants sought refuge in short-duration government and corporate debt instruments offering relative safety. The preference for fixed-income assets reflects expectations of a stable interest rate environment and moderate inflation pressures. Treasury securities denominated in euros also gained traction amid European economic uncertainties. This shift signals a strategic rotation from equities toward assets perceived as lower risk during periods of volatility. Market participants continue to monitor central bank communications for guidance on future rate trajectories. Millennials and Generation Z consumers in the United States are increasingly adopting conservative financial behaviors, with more than half spending minimal amounts on leisure activities such as dating and entertainment. Many are prioritizing savings and debt repayment, reflecting cautious attitudes shaped by recent economic challenges. Alternative funding strategies for higher education, including home equity loans and retirement account withdrawals, have gained popularity. Family-sponsored 529 education plans are also commonly utilized to reduce reliance on student loans. These evolving spending patterns have important implications for consumer markets and financial services providers.
Firefly Aerospace, despite a highly anticipated initial public offering that raised $868 million, witnessed nearly a 10% drop in market value amid volatile trading sessions. Investor sentiment shifted following the IPO as concerns about long-term profitability and market competition emerged. Analysts suggest that early enthusiasm may have been overly optimistic given current aerospace industry challenges. The company's stock price volatility reflects uncertainty regarding future financial performance and strategic execution. Market watchers are awaiting forthcoming quarterly reports to reassess investment potential. China's economy continues to face deflationary pressures as July's producer prices declined unexpectedly and consumer inflation remains stagnant, signaling weak domestic demand. This slowdown raises concerns about sustainable growth and potential policy interventions to stimulate economic activity. Asian markets responded cautiously, with investors favoring stable assets amid geopolitical uncertainties. The weak pricing environment could prompt additional fiscal and monetary support measures from Chinese authorities. These developments carry significant implications for global supply chains and trade flows. Danish renewable energy firm Ørsted is considering a share issuance valued at up to 5 billion euros to strengthen its capital base and finance expansion projects. Investors are closely monitoring this potential move as the company seeks to capitalize on growing demand for sustainable energy solutions. The additional capital would support large-scale offshore wind farms and other green initiatives. Market reception is likely to depend on the terms of the offering and prevailing economic conditions. Ørsted remains a key player in the transition toward low-carbon energy markets. Insurance giant KKR continues to expand its investment portfolio within the healthcare sector, overcoming regulatory hurdles and leveraging legal mechanisms to finalize major deals. This strategy demonstrates the company's adaptability to complex market environments and long-term growth ambitions. Regulatory approvals remain a critical factor in executing planned acquisitions and partnerships. KKR's activity underscores the broader trend of financial firms diversifying into resilient sectors. Equity markets have responded favorably, recognizing the potential for sustained returns in healthcare investments.